Hamish, good to see you. We're sort of 2 weeks into profit reporting season. Just covered a couple of quick results there. What do you make of it all so far?
Thanks, Ed. Well, it's been incredibly volatile, and we've seen a huge pivot and rotation in markets, really away from those companies where the market's concerned about AI disruption and questioning their competitive advantage and really what the terminal value is for these businesses, and really into AI safe havens. So banks, staples, health, not healthcare so much, but really utilities, and then out of a lot of, as I said, the sectors that have really been hit hard or questions. Technology sector clearly, but it's flowed over into things like insurance brokers, classifieds, particularly the online classifieds have been hit, car sales, retail, Seek, which you highlighted before, and REA. And also, I think a number of the platform businesses have been hit pretty hard on this thematic as well.
Yeah, another company down pretty heavily today, Cochlear, and the CEO, Dig Howard, said partly due to the strong Aussie dollar, which is at around 71 US cents, he said that could cost them about $30 million in profit over this year because they're one of the big exporters.
Yeah, look, the A dollar is starting to be a feature, particularly with 6% move really in the last few weeks, and that is certainly a focus for the offshore earners. I think one of the other themes that's come through or coming through in reporting season is just margins. There's a lot of focus on margins at the moment. The last 5 years post-COVID, we've really seen strong margin expansion as companies have been able to push up prices, and we're sort of entering a phase where for the first time retailers, for example, are having to really put some promotional dollars behind their businesses to try and drive sales. And so, again, you highlighted Nick Scali before, but there's been a number of Temple and Webster yesterday, examples of companies where the market's starting to question what's happening with the gross margin, and seen some pretty big de-ratings.
Yeah, another big one was AMP. We spoke to their chief executive yesterday. They lost almost 30%. Pro Medicus as well yesterday hit very hard too. Why do you think investors are reacting so brutally this time around to any small miss?
Look, I think it's really a lot of it's around the AI dynamic, and clearly, we've seen an exponential increase in investment by the hyperscalers in AI. So just through the US earnings season, we've seen a 22% increase in the CapEx commitment of hyperscalers. So that's increased now 60% in the last 12 months to $655 billion. And so the market's clearly concerned about whether we're going to get a return on all this money that's being spent on AI. And I think that has just sharpened the focus, and we're coming into our reporting season with a very intense focus around that. In addition to that, some of the plugins we've seen and the apps that have been announced in the last few weeks from the likes of Anthropic and the like have also started to question it. And there's this prevailing view now or question, I guess, are companies going to be disrupted a lot more than we think? And really that is feeding through. And you highlighted Pro Medicus. We think that business is, still a very attractive competitive position, but the market's now thinking that radiology can be taken over by AI, and that their moat, if you like, is not what it was.
Yeah, but when you look at the overall market, though, it hit 9,000 points yesterday. It's obviously been very volatile with all the tech sell-offs happening on Wall Street, as you've mentioned. But how big an issue do you think that tech sell-off is going to be over this rest of this year?
Yeah, look, I think it's the $64 question at the moment. I think clearly multiples got, and valuations got overdone. But I think it's important to go back. This often happens when we see direct disruptive technology. You see the euphoria phase, and then you see some consolidation and some questions about cash flows and returns. And we're certainly entering into that. I think that's the phase of the market we're at the moment. The question about how long it could go on is an interesting one. I worry more broadly that if you look at the rotation we've just seen really in the last 2 weeks, so months to date, the top 20 stocks are up 5.5%. The market's broadly flat, and the small caps are down 4%. And that's, for the market to go higher from here, the question is, if it's going to be in the banks and the staple stocks, really can they move a lot higher where the valuations are?
Right.
And I think there's a question mark against that.
Hamish, thanks so much for your time. We've run out of time.
Okay, thanks, Ed. Good to speak to you.